Now, the CPR capture pain relief location process is described as such. So the capture phase of the CPR location process, we need to identify locations on the price chart where traders have been baited and captured, right? So they've been basically FOMO'd into the trade. They've seen a trade set up and they've really committed capital into the market, right? So price action fails to follow through in their expected direction, and loss aversion kicks in, which means that stop losses are moved, removed, or not used. So the capture phase would look something like this, where you have, a sharp move up, right? And traders, you might have seen some bullish price action, like we indicated before, and we know that traders would have entered, FOMO traders seeing this move up would have entered on at least some sort of candlestick or whatever entry, because if you would have done it, if you would have entered randomly and you would have entered on bullish price action, then chances are that there's a lot of other traders that would do exactly the same thing, right? So what we need is, first of all, the context of the market. We need a move. It could be even just a couple of candles, a couple of really strong candles in a direction, large candles. And then what we want to see is where price action fails to follow through to the upside, right? So we know they've committed capital around here. We've seen the context. We've seen the price action. They've committed capital. And then we want to see price fail to go in their direction. So we want to see prices now start to move against them, right? And this is where, so we've had the FOMO phase, FOMO, right? Which is the context. And then we start to see the loss aversion start to kick in, because traders will tend to put their stop losses below candlesticks, below swings, and if prices start to go against them, that's where the loss aversion starts to kick in, right? Because they can't believe that once they've committed capital and they're thinking prices are going high and it starts going against them, they will cancel and they will move their stop lower and they will remove their stops, just like Nick Leeson was doing, and their inability, his inability to take a loss. So if he can do it, and he was a top trader, responsible with for millions and billions of pounds, if he can do it, then there are sure going to be a lot more traders that are doing that. And when prices go against them, this is where the loss aversion starts to kick in, right? And then what we want to see is the pain phase, right? So once we know that price is going against them, we're still waiting. We're not entering, by the way. We're waiting for all of this to happen, because we're going to take advantage of these traders and the way that they've gone through the capture pain relief phase and the process, and then we're going to take advantage later on. So we need the pain phase to start to take effect, and the more pain, the lower this goes, this price action goes, is the more pain these traders who entered at the top and anywhere around here are going to go through, because they've pretty much cancelled their stop losses. They're looking at their profit and loss, right, on their broker, and they're seeing if they've risked £100, right, they risked £100, sorry, then that's gone to 200. Now it's gone to 300, right? Minus the further down, because they can't say they can't, but their inability to take a loss, right, is very, very painful. For them to realize this loss is going to be so painful, so they're hoping and praying that prices are going to come back to this level. And now the deeper prices go and the faster prices move away from this level, is the more shocking and more painful this is, the pain process is going to be. So the more painful the process is going to be, the better for us as well, because when it comes to the relief phase, the pain and then relief, as prices, if prices ever do, they're lucky enough to get prices come back up into a level where they've decided to enter. Let's say, for example, they entered around here, and there'll be various traders that will enter at different levels around the area, right? But you'll see FOMO traders pretty much will always enter at highs, right? You'll start to see the pain relief as prices start to go back to 2 to 100 loss, and then what they'll do is they will exit the trade, because the best trade other than a profitable trade is what they call a scratch trade or a break-even trade, or even a trade at a small loss. So even if a trader can lose £50 and he was down, let's say £400, right? £50 loss is going to seem like that, not that much pain when it comes to what they were observing when prices were all the way down here, right? So they've gone through the pain phase, and now they're going to go into the relief phase of the CPR, and this is where our CPR location is. We know that there's going to be a lot of relief at this stage and at this level, and this is where we look to take advantage. So as traders bought here, they have to manually exit, and if they buy, the opposite transaction must occur. They need to sell to get out, and if they sell, right, that's going to induce supply. Yeah, so supply is going to come into the market, and we're also going to sell, right? So that's where we're taking advantage of traders who suffer from FOMO, who suffer from loss aversion. And what we're going to do is we're going to take advantage and get in on the supply, right, and the sell orders and the sell equation, right, and the imbalance of supply and demand orders at this level, right, and we are going to look to trade to the downside. So we need traders to go through, right, the pain phase, which is observe the agony of those traders not able to accept the loss as price goes against them. The speed of price action against their trade position should preferably be sudden and fast. Note distance and time away from the entry, right? So I've just explained that, right? When you see prices come into a level, then prices go away. The speed and distance away from a level and the time away from the level adds to the agony and the pain. And then when the relief phase comes, when or if price returns or near to their trade entry location, traders will manually exit, right, for a small for a break even or a small loss, and this is where we will take advantage. Now, when it comes to looking at the breakout CPR location setup, it's pretty much as I just described. So what you want to see is recent and obvious bias on price movement. So you want to see the move up, and then you want to see a clear and obvious support and resistance level, right? And you want to see convincing price action that the level has broken, right? So this is where traders will commit capital. So what I mean by the first three is you want to see something like this, right? So you want to see clear bias, right? Price movement. Then you want to see a pullback. Traders will consider this to be a level, right? A support and resistance level, potential, resistance level. We know this to just be potentially just profit taking. We never look for, the first move of a level away as, resistance or supply, or that the strong supplies come into the market. But for the sake of the CPR location setup, we're looking at how to take advantage of breakout traders, right? And when the expected move fails, right? So we want to see a pullback, then we want to see convincing price action that that level has broken, right? Because they're trading the break of this level, right? This is where they're looking to get in. Some traders will trade just pending orders. Some traders will wait for candlesticks to close on various different time frames, from the 5-minute to the 15-minute to the hourly, etc., right? But the more, the higher the time frame, the better the the potential fake out, right? And the way that breakout traders will be committed into taking this type of trade, and they will commit capital, from their accounts where their money can't be touched into the market when they press a buy trade, and this is where they will commit capital, and this is really the bait that we need, right? So convincing price action that the level has broken, so they will commit capital, which is the bait, and then we want to see the failure of the move to follow through, right? And this begins the capture phase, right, of the CPR process. So we've got the bait first, then we've got the capture, right, and then a reversal of price forcing the removal of stop losses, and this is again the capture and the pain phase. So traders will tend to, again, breakout traders will put their stop losses below the level of potential resistance, which is supposed to turn into support if it breaks above, and they'll place their stop losses at various levels around here. And as price starts going against them, what they'll do is they'll move, if they use stop losses, or remove their stop losses, right, as price goes against them. So they start to remove their stop losses, right? You'll have stop losses underneath here, underneath recent swings, right? And as prices go against them, this is the pain phase, right, of the cycle. And what you really want to see is a sharp move away from that level, and the reason why is because if you have something like this, right, and then prices are, kind of do something like this, it kind of gives people time to exit the trade. You don't want them to exit the trade, right? You want them to be convinced that prices are going up, and then you want shocking price action to really kind of drag them and into the pain phase, right? Because like I said, if prices kind of come down and they bounce and they don't, traders will tend to just get bored, think that the trade is not working, and then get out for a small loss, and we can't take advantage of them. We need them to be in their trade, right, still. And when prices go shockingly against them, that's when they will tend to remove their stops, hoping and praying that prices will come back to a level. So we observe the pain phase, and then if prices ever do come back into and around the level where we have a breakout, where we had a breakout, a failed breakout, right? This is the relief phase. Again, because they would have seen their profit and loss down, prices come back up into this level, and then you will see the relief phase. So it's the pain phase. Pain. P. This is the capture phase, right? And then when traders look to exit for a small loss, so this is going to be forced selling. This is not willing selling, this is forced selling, right? These traders are going to get out. What you're also going to have is traders like ourselves who understand that these guys are in a lot of pain and they're looking to manually exit, which is forced supply. If they bought here, and we're looking to take advantage of these traders. So let's look at this, what this looks like on a price chart. So looking at our previous example, let's analyze who is entering on this trade, and it would be the breakout traders, right? So we have a breakout trader, right, who is looking for a break of this level after seeing the context. They FOMO'd into the trade, right, and they are looking for a level to break, and this would be the level, right? So what you're also going to have, if you look at the price action, you're going to have traders that are going to be entering at literally just a break of the level. You're going to have traders that will enter on a candle close of the level, and then you're going to get traders who maybe want a bit more confirmation, and you've seen this bullish candle, right? This we call an outside candle, There's many different names for it, but I name it an outside candle, where you have a close above the previous candle, but the wick has gone below the low of, the previous candle stick, and traders will enter here. So there's a load of breakout traders that will be entering around this area on the price chart, right? And we know this to be true, because if we were trading breakouts, how would you enter on a breakout? That's what you have to ask yourself. So what we want to see now, that's the bait, right? This is the bait that will get traders to commit capital, from their accounts into the market. And then we start to see something like this occur. Now, this is the unexpected, right? They weren't expecting this to happen, right? Prices to close below, price to go against them, right? And again, what we're doing as CPR location traders we are sitting on our hands and waiting for this type of price action to happen, right? Because we know that at some point we should have a level to the right, right? And this slowly develops. So once this starts to occur, traders start to get caught in their positions, right? They start to feel that they might want to move their stop loss, right? Or, move it a bit lower, right? Breakout traders are starting to feel the pressure, right? But they're captured in their position because we know that they've committed capital. Again, the sharp move away from that level. Again, traders start to remove their stop losses, moving them further down, maybe below the swing. Hopefully, it won't touch here. They might move it here. They're taking on more risk than what they originally anticipated. And this is, again, just through loss aversion, right? They hate to take losses. Losses feel twice as intense as pleasure feels good, right? So, and the gains would have felt good. So they're definitely in this trade still, right? And then they're moving their stop losses as prices start to go against them. And as prices go against them and even break the swing, right? Because we want them to at least break a few swings, because psychologically now, that the trend is ended, right? And so you don't know, we're dealing with probabilities, but the probability and the chance of the trend ending once it breaks a swing or two, right, is that it may, want to enter into a ranging market. We know this, but traders who are caught in their position, all logic goes out of the window. This now starts to look like a reversal in the trend, right? This starts to look like move down, and now a lower low. This becomes a lower high. Imagine you're up here and you're seeing lower highs and lower lows being made, right? It's not a pretty situation to be in, right? And again, this is the pain phase of the capture pain relief location process. This now becomes our breakout CPR location, right? Because we know that from anywhere above here, breakout traders will be situated, and this is where they will be caught in their positions, and this is where the pain is taking place. And as prices go further down, this is what's happening, right? Again, feel their pain, look at the sharp move away, look at the potential relief that they may get, right? So traders are, trying to hold on. As prices, they're getting a bit of relief, right? And as prices come back up into this zone, what starts to happen is what is known as a crowded exit, right? So you have these CPR location traders. They, the first ones that got in on that absolute breakout are going to probably be looking to exit first, right? For a small loss or potentially break even. And if they're exiting, right, they bought to enter, right? If they buy here, if they were to buy here, their exit is a sell, right? And this is a forced exit, right? This is a forced sell. This is forced supply. It's a manual exit, right? They're forced to get out. And then what we have is more traders and more forced supply coming into the market. These traders now spike up, are able to actually get out at break even. You can start to see the price action. These traders here who at the top of the market, can't believe their luck really, that prices have really kind of come out. There's not too many traders that are going to hold, right, after, bearing this type of price action in mind, and they've suffered quite a lot, right? Next best trade is a scratch trade, is a break-even trade. This is where forced supply is going to enter the market, right? And this is where we will take advantage. This is where we will have willing supply enter the market as well from our trades, and we're looking to trade to the downside, right? So what you have as a summary, right, we have to look at the different types of traders at levels, right? So what we have is CPR traders, which are the traders that we're taking advantage of, right? And that would be forced buying and selling, forced supply and demand at a level, right? There will also be take profit traders, right? And this is forced buying and selling, or forced supply and demand at the level. And I'll go back into that on the chart. And we'll have new traders like ourselves, which are willing buying and selling at the level. So if we go back, right, we've already covered these CPR traders, gone through the process, and now that is what we would call forced supply, forced to exit, right? Forced to get out at break even. Then we have ourselves, right, which are looking at, supply and demand levels, understanding the psychology, right? And we're taking advantage of, the CPR traders, right? And this is willing supply or willing sell orders coming into the market. What you also have is, let's say, for example, you have retracement traders, right, who have probably entered on, sorry, that was a bit of a bad drawing, but this is a level of potential support, right? So you have a pullback, and then traders will look to enter here. Now, if you enter here, where are you going to take profit? Somewhere around the highs, because you see that this is going to be a problematic area. This is where other traders are going to be getting in, right? So if you're taking profit at this level, right, you are forced by market structure to exit your trade. And if you bought down here to sell, to exit your trade, to take profit, is going to be, more forced selling. And then you have some more willing selling coming in, not only from ourselves, right? This is also known as would be a supply zone, right? But also traders who are looking at this area here and looking and seeing that we've got 1, 2, 3, 4, 5 touches of a zone. So we've got this little miniature zone right here, right? So that would be considered resistance on a potentially lower time frame, or even on this time frame where you have 1, 2, 3, 4, 5 touches of a level. Traders will look to get in, support and resistance traders will look to get in, level traders will look to get in at levels, right? And the more touches of a price, the more this level is going to be or have eyes on it. So you have more willing selling coming into the market, right? So you have willing selling. These are trade setups potentially for traders looking to get short, right? You've got little pin bar here, got pin bar here, you got another pin bar here, you got some engulfing candles. So more willing selling and supply is coming into this area, right? So you have a combination of supply and demand, right? As far as an imbalance of supply and demand. Now you got to think to yourself, with all that supply here, right? With all that supply orders coming here, all that forced and willing supply, who is doing the buying, right? Is there any demand coming into this level? Now, that's obviously a question for you to decide, but from a technical point of view, right, not necessarily taking into account fundamentals or sentiment, we can see technically that this area will have potentially a lot of forced and willing supply coming into the market, and this is the equation that we need for us to then take advantage of traders that have been in the CPR process. It just adds to the supply equation, and then we get a move away. So again, we're looking at different types of traders. CPR traders, right, they'll be forced buying or selling at a level. You've got take profit traders who are forced buying and selling at a level, and then we have new traders like ourselves and other level traders and potential support and resistance traders looking at willing buying or selling at a level.